Have you been trying to figure out how to get on the property ladder? Maybe you're renting your current accommodations and you have a great landlord, good relationship, or maybe you're a landlord with a fantastic tenant and you're looking to get out of the property rental game and considering selling your property to your current tenant. It's a quick and easy way of making sure that you get the right person in there and you don't have to go through the hassle of going to an estate agent. Today, I'm going to be talking you through a concessionary mortgage. It's a product that a lot of people don't know about. So, as always, I'll tell you the pros, the cons, and give you enough information to be able to make an informed decision. Hi, my name is Anthony Lindsay, and I've been doing finance for over 30 years, so I know a thing or two. I make these videos to share information about mortgage products and just finance in general. So make sure that you like, share, and subscribe. And if you have ever have a topic that you'd like for me to talk about, make sure you put that in the comments. So today we're going to be talking about concessionary mortgages. What is it and how might it benefit you? So, a concessionary mortgage is when a property is sold below the market value, often between people who already have a relationship, like family members or landlords and tenants. The difference between the sale price and the market value is called the gifted equity or the vendor gift. This acts as the buyer's deposit. So this is one of the great things about this mortgage type. If you are buying a property from your landlord and maybe you've struggled to come up with a deposit, this is a way of using that discount that they offer you as the deposit towards the product or towards the mortgage. So this can mean that essentially there's not as much money coming out of your pocket. It's a win for you, it's a win for the landlord because the landlord then doesn't have to worry about going to an estate agent. So let's just do a quick example of what it might look like. Let's just say you have a property and the market value is 500,000. But then the landlord decides to sell it to you for 450,000. So there's a 50,000 pound difference, and that could be used towards the deposit. So a concessionary mortgage is a good way of helping the buyer save money as far as the property purchase, and it can help the landlord move the property a lot quicker. So let's just go through an example of what it might look like as a landlord, because a lot of landlords, because of the new renters' right bill, are leaving the property market or they may be switching over to commercial. They don't want to go through the hassle of having people rent properties with the new bill that's going into force. But they also don't want to go through the stress and the headache of going to an estate agent, having people come in and out, having a bunch of time wasters who may not actually be serious about buying the property. So in this example, you have a landlord is an existing buy to let market, and due to the new tax rules and the regulations, they're looking to exit. They offer the property to their tenant who's lived there for about 7 years. The property is 220,000, though it's worth 250. So they're going to sell it for 220,000, although it's worth 250. Now you might ask yourself, why would they do that? Because they might go out on the market and it might take 4 months, 6 months, 8 months to find someone who's actually serious about buying the property. And in that time, it's a lot of stress and a lot of headache, and you may not be able to find someone to buy that property. Why not sell it to your current tenant? It will be quicker, it will be easier. So in this, the tenant secures a concessionary mortgage using the 30,000 pound gifted equity as their deposit. So there's no need to save the lump sum. Everyone wins. It's a quick sale. There's no agent fees, and loyal tenant becomes a house or a home owner. And that's what we all want. There are a lot of people trying to get on the property ladder who this can be perfect for. It may also be a situation where there's a family member that owns a home. Quite often, an older couple might be downsizing. So, in this scenario, parents are downsizing and they sell their home worth 400,000 to their daughter for 350,000. So the £50,000 discount is treated as a gifted deposit. The outcome is that the daughter gets on the property ladder with a smaller mortgage. Parents avoid market hassle and help with the generational wealth building. I talk about it all the time, and I'm passionate about generational wealth. And one of the best ways of creating generational wealth is through passing on property from one member of the family to another. Now, as always, I like to go through the pros and the cons. So every product's going to have some good features and some bad features. So first, let's just look at some of the pros. So there's no or potentially a minimal deposit needed. This is usually the stumbling block for people where they struggle to come up with enough for the mortgage. So the gifted equity often meets the lender deposit requirement. Sometimes it doesn't. So that's why we will be talking about specialist lenders. It's faster, smoother sales process, especially when the buyer and the seller already know each other. So it might be a tenant. So it helps the buyers who can't save a large deposit get on the property ladder, and it can reduce the overall borrowing. So maybe the issue you're having is not just the deposit, it's that your income is not enough to get a mortgage for the property price that you need. And the concessionary mortgage can help with that. Now we're going to go through the downside. And always, as I say, do your due diligence. Make sure you speak to a broker. My videos are not here to replace speaking to a qualified professional. They're just here to introduce you to products that you can then go and speak to your mortgage broker about. Here are some of the cons. The property must still meet valuation criteria. This means that the lender still needs to feel that the property is worth the amount that it's being purchased for. So lenders will check the true market value, not what you think it is, not what you hope it to be, but the true market value. There are potential tax implications, especially for gifted equity between families. So make sure you speak to an accountant. Gifted equity must usually be non-refundable. So you can't do this thing where you say it's gifted, but you actually have to pay back. And not all lenders will accept concessionary purchases. This is why you need to go to a specialist lender. Now, you may not know what a specialist lender is. We will go through that, and I do have other videos on that. And as always, make sure you like, share, and subscribe. And if there's a topic that you'd like for me to talk about, be sure to put that in the comments. My name is Anthony Lindsay, and that has been just a little bit about concessionary mortgages. They're ideal for parents who potentially want to support their children because they're selling their current home. The parents are, because they're downsizing, and they want their siblings or their kids or grandkids, whatever, to be able to buy that property at a discount. And it's fantastic for landlords. Thanks for watching, and make sure you like, share, and subscribe. Do you know what a specialist lender is? Do you know what the purpose of a specialist lender is when it comes to mortgages? A lot of people are out there and they're not the vanilla client. So they're people that may have had credit bumps in the past. They may need a concessionary mortgage. They may have been self-employed for less than 3 years and they're looking for a mortgage. Today, I'm going to explain to you how a specialist lender works and when a specialist lender may be the right person to talk to or for your mortgage broker to talk to. All right, so today we're going to talk about specialist lenders. So, specialist mortgage lenders can help if you need a concessionary mortgage, if you're a contract worker, you've been self employed for less than 3 years, or if you have credit issues, or sometimes you just have a complex need that the traditional high street lender will not be able to meet. Now, let's look at what the definition of a specialist lender is. It's a special mortgage lender is a financial institution that provides mortgages to individuals whose circumstances don't align with the standard lending criteria of traditional high street banks. So when you go to your high street bank, they usually have a target market, and quite often the process is very automated. You don't have that individual person looking at it at a case by case. So these lenders offer more flexibility and may consider factors like poor credit, unique income situations such as expats or people that get paid in Bitcoin, or other complexities that high street lenders may not accommodate. So, in normal terms, it's for regular people. Um, you do have people that are what we call vanilla clients. So, a vanilla client would be UK passport, good salary, potentially over 75,000, someone who has no credit issues, is paid PAYE and has a sizable deposit. For those type of clients, they should still go to a mortgage broker, but there'll be a lot more options. But if you're like a lot of people, and maybe you've had a credit bump, you're a contractor, you're an expat, you need a concessionary mortgage or something like that, then you might want to consider a specialist lender. The high street banks are great, not going to knock them. I've been a bank manager at several high street banks, but they tend to have limited products. They have set criteria and they have inflexible hours. So, as a mortgage broker, I kind of work around when my clients need to speak to me. So, I'm available on weekends if needed. I'm available in non social hours. Whereas with your bank, you're not going to have that flexibility. And even when I worked in the banking industry before I started focusing on just doing mortgages, I thought that the only time that you should go and see a broker is if you have credit issues or if you have something that comes outside of the high street bank's criteria. But what I now know and what I try to tell people, and I want you to understand, you should always speak to a broker because a broker is going to be able to look at all the different lenders and give you the best options for you. So if you go directly to your bank, it is a little bit easier because quite often you feel you have a relationship with them, etc. But they'll only be able to talk to you about their product. So they may be giving you their best rate, but it doesn't mean that it's the very best rate that is available on the market. Also, the incentive structure is different in that a mortgage broker is going to also talk to you about protection. A mortgage broker is a relationship business. So we go the extra mile to make sure that you refer us to friends and family. A mortgage broker also, in my case, for example, we do a help to find service. So I actually will assist you in finding the property. I'll help you negotiate the deal. A lot of things that the bank staff will not do or do not do because there's not really an incentive for them to do that. They're salaried employees. You're going to them. They don't have to really sell themselves because you're already bought in to that particular lender. So you should always speak to a broker. Make sure it's a broker that's been referred to you by someone you know, someone you trust, and someone that they have used themselves recently. It's good to look at reviews and it's also good to get referrals, but you want to make sure that that person that's referring the broker has used them themselves. And your broker should always put your needs first. Your broker sometimes has to protect you from yourself. So make sure that you're open and honest with your broker because as we talk about specialist lenders, there's a lender that will lend for every circumstance. So always be open, honest, and your broker will find you the best lender. If you're a contractor, you may have found it hard to get a mortgage, especially if you are paid through an umbrella company. So today I'm going to cover off a little bit about specialist lenders and how they can help if you're a contractor and maybe you're between contracts or you are paid through an umbrella company. So in most cases, it's going to require a minimum of 12 months track record of contracting. A few mortgage lenders can consider day one contractors with relevant industry experience in a previous employed role. The current fixed term contract must have at least 3 months to run. Some banks and building societies require 6 months. So the day one contractor situation would be someone, let's just say, I have clients who are social workers and they've worked for the council or they've worked for the NHS or whatever entity for many, 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 many years as a PAYE employer. They've decided now for flexibility or because it's more money for whatever reason to become contractors. They move into a contract and they've just started their contract. Some lenders will consider that because they have the history of working in that field previously. If you are just starting contracting and you've never done anything in that field and you don't have the right contract structure, you may find it difficult, but there are lenders who can assist in that circumstance. So if you're a contractor, 9 times out of 10, going to your bank is not going to get you the result that you need. This is why you're going to want to speak to a mortgage broker. When you speak to your mortgage broker, particularly if you're paid through an umbrella company, they'll be able to find the lender who they know will lend to you. One of the worst things that you can do is go directly to your bank, maybe not disclose everything because you weren't asked the right questions because the bank staff are quite busy. They give you an agreement in principle that has not been validated, meaning they haven't asked those probing questions. Then when you go to make the purchase, you get a decline. You're told that they're unable to proceed. That's one of the worst things that can happen because when you then apply with another lender, so hopefully at this point you'll have learned your lesson and you'll go to a mortgage broker. One of the questions that will be asked on the application is if you've ever been declined a mortgage. This is one of the many benefits of going to a mortgage broker. As mortgage brokers, we'll be able to look at the criteria, we'll be able to speak to the lender before we do an application or do a search or do anything to make sure that you meet that lender's criteria. We'll also be able to go over an illustration with you that you get a feel for what your monthly payments would be, what the interest rates are, etc. And if you watch any of my videos, you know what I'm going to say now. Don't get too tied down to interest rates. Quite often I have clients who, watch the news and they see the Bank of England has raised rates or lowered rates and they talk about rates. Rates are very personal to you, your circumstances, the lender you go to, and what outcome you're trying to get. That's why I do these videos, that you can have a more informed conversation with your broker or even with your bank if you decide to do that, because you'll understand some of the concepts. I'm not giving legal advice or accounting advice, and these videos are not designed to replace speaking to a licensed professional. So make sure you do your due diligence. But I can tell you, if you're a contractor, there is hope and you can get a mortgage. Some of the things that you're going to want to confirm: are you paid via an umbrella company? If you are, there are some lenders that will not lend to you, and they will ask questions about the umbrella company. So make sure that you understand, and it's a reputable umbrella company. There's been some nightmare stories about umbrella companies in the news. What does your contract say? Does your contract say that your contract ends on a certain date? Does it have an option for a renewal? What is the notice period? Most contractors I know are quite proficient in negotiating their contract, so that shouldn't be a problem. How long is left on your contract? And are you currently between contracts? These are going to be the key things that you're going to want to talk to your broker about. As I said, my name is Anthony Lindsay, and I've been in finance for over 30 years. So I am able to give you a breadth of information. I've done collections, I've done wealth management, and I've done mortgages. So when you speak to me or when we have a consultation, I'll be able to answer questions about credit and other things. That's why I do these videos, that you can have the information that you need before you move into having the conversation with a broker. But if you're a contractor, make sure you reach out to a broker who understands the specifics of being inside or outside of IR35 and someone that can give you the best advice. Thanks for watching, and make sure you like, share, subscribe. And if you have any topics that you'd like for me to talk about, make sure you put those in the comments. All right, so we've had some discussions about mortgages for contractors. Now we're going to have a discussion about mortgages for self-employed people who have maybe been unemployed for less, have been self-employed for less than 3 years. If you're a self-employed person and you've tried to get a mortgage and you've been self-employed for fewer than 3 years, you're going to want to watch this video because there is hope. I can explain to you some of the criteria that you will need to meet, but you don't have to be concerned if someone has told you you can't get a mortgage unless you've been self-employed for more than 3 years. So make sure you watch until the end because all of the information is relevant, and you'll need to understand that it's not just one piece of criteria, but there are several pieces of criteria if you're self-employed for fewer than 3 years and you need a mortgage. Okay, so you're self-employed and you've been self-employed for fewer than 3 years. You've gone to your bank and the bank has said, no, we need 3 years worth of SA-302 and tax overviews. There is hope. There are lenders who are specialist lenders who will lend to you even though you don't have 3 years. So for self-employed individuals seeking a mortgage, lenders typically require evidence of a stable and sufficient income over a period of time, usually 2 to 3 years, to assess the affordability. Because if you're borrowing money, the bank needs to know that you can pay it back. This often includes providing certified accounts, SA-302 forms, and tax year overviews from HMRC. Lenders also consider factors like the deposit size, credit score, and the nature of the business when assessing the self-employed application. So in regular people speak, you will need to provide at least 1 year's SA-302 and tax year overviews. I would advise anyone who's starting a business or considering becoming self-employed to find a good accountant. You can find accountants out there that will essentially execute what you ask them to do, but you need to speak to someone that's going to do things within the law, within regulatory frameworks, and also advise you, because it's easy to just do the return and get the result you want. But when you go for a mortgage, what I found with a lot of self-employed people, when they go for a mortgage, they say, oh, I make tons of money, but they can't evidence it because there's cash payments and all kinds of things in the background. One of the first things that I learned in banking is that if it isn't documented, it didn't happen. Even more so when we're talking about the tax man. You want to make sure that everything is evidence that you're doing everything above board. Because when you go to get that mortgage, the tax overview and the SA-302 is going to be the determining factor to determine how much you can afford. Now, obviously, if you have more than 1 year, that's even better. But you can get a mortgage if you only have 1 year worth of SA-302 and tax year overviews. The things that you're going to want to ask yourself is, do I have at least 1 year tax overview in SA-302? Do I have a separate business banking account? And do you have an accountant do your taxes? I'm going to drill down a little bit on the business banking account. As someone who was a bank manager for many, many years, both in the US and the UK, we can see things on people's bank statements that may cause concerns. But when it comes to getting a mortgage, it's not just about the concerns about seeing things being intermingled. It just makes it more complicated and harder for a underwriter to assess what money is what. So my best advice to you is always have a business banking account. Make sure that you do not commingle your personal and your business. Make sure that it's easy, and it's going to save you money because as far as bookkeeping, if you have a business banking account, you have a client, the client pays into that business banking account, you pay the expenses out of that business banking account, any retained profit stays in that business banking account. It's super simple when you go for your mortgage because you then provide that banking account. It will show turnover, it will tie up with your SA 302 and your tax overview. In most cases, they're also going to ask for your personal business account, personal banking account, which is fine, but just keep it clean, keep it simple, make sure that everything makes sense. So, as someone who's been looking at bank accounts for over 30 years, I have a forensic view. I can paint a picture of who someone is by the way that their money flows. What banks don't want to see is that random money is coming in. They don't want to see just random references. They want it to seem clean. They want it to be transparent. They want it to align with the type of business you have. I always use the example like if you're a graphic designer, let's say, which my wife is, and they can make tons of money. But if you're a graphic designer and every 3 months there's £100,000 being paid into your account, that doesn't line up with the type of business you have. There are specialist lenders that can meet every lending circumstance. So the key is just to be honest. The key is to be open and transparent with your mortgage broker as you're going through the preliminary stage of going for a mortgage. Because an experienced mortgage broker is like a detective. Like, this is one of the things I love about what I do is in speaking to a client, as I'm speaking to them, it's painting a picture of which lender might be best for them. I can give them the options, they can make the decision, but we don't waste time with lenders who wouldn't lend based on their circumstances. So having a good, experienced mortgage broker is going to save you time and save you money. I make these videos so that you can have a better understanding of how finance works and how mortgages work. I don't give financial advice and I don't give legal advice. And these videos should never, ever, ever replace speaking to a qualified professional, because then you'll be able to go through the details of your circumstances and what you're looking to accomplish. Specialist lenders overall can help with lots of situations, but some of the key situations are if you have a non-UK passport. So you may be an expat, you may have never lived in the UK, you may have just moved to the UK. They can help with that. If you've had credit issues, if you've had repossessions, skilled worker visas, and hard to explain situations. I have lots of videos on credit, but just as a guidance on the credit issues part, if you have any defaults, it's best to satisfy them. If you have any CCJs, it's best to satisfy them. Don't watch these online videos about credit that they're just essentially trying to sell you a dream about how not to pay people back. It's dishonest and it's not the best way forward, and it's going to cost you more in the long run. If you have a small dispute over a BT bill or a phone bill, and even if you have the moral high ground because you're right, because they messed up, don't let it go on your credit. My advice is pay it, then dispute it, because quite often we'll take the moral high ground because we are right, but it's £200, and then that £200 may end up costing you tens of thousands because you don't qualify for the best mortgage. I'm not saying to throw money out the window. None of us have money like that. But what I would strongly advise is don't listen to these people online about all these government schemes where they can write off this, that, and the other. It will come back and bite you. If it's a genuine debt and you owe it, and maybe the lender or the company has made an error and you're disputing it, if it comes to the point where it's going to go on your credit card, best advice is usually to pay it, then dispute it, because then you can get that money back. But if you're going to be applying for a mortgage, just having that late payment, missed payment, default, unsatisfied CCJ or whatever on your credit profile is going to limit who will lend to you. So ultimately the person that suffers is you, and we want to help avoid that. Specialist lenders are amazing, and they're not these shady, institutions that are operating in some dark alley. These are quite often reputable lenders who maybe have a sub brand. So you might have a high street lender who, for their vanilla clients, has one brand, but then underneath it, they have a subsidiary. Make sure you do your due diligence and make sure that you prepare. So here's how you prepare to see any specialist lender or any mortgage lender in general. Review your employment contract. So understand what kind of employment contract you have. Understand, are you full-time, part-time? Are you 0 hours? Understand that. Tidy up your bank statement. Make sure your bank statement doesn't have random payments going into it. Make sure that you're noting things when you're paying people. You're putting the right reference. Check it, because you might have direct debits that you're paying that you don't need anymore, standing orders. I see it all the time where people have home insurance and content insurance, which covers them for certain things. And then they have another cover for those same things that are covered in the content insurance. Check your credit report a minimum of once a year, but I'd recommend twice a year. Always check your credit report before you apply for a mortgage. That way, when you speak to your mortgage broker, you can identify anything that's there. And if you speak to your mortgage broker, as I always suggest, 6 months before you're ready to actually get your mortgage, it means you can tidy things up and make sure that your credit report is as good as it can be for you based on your circumstances, that you'll get the best mortgage that's available to you based on your circumstances. Mortgages are like fingerprints. They're very unique to you. Every house is different. Every buy and sell situation is different. And as a mortgage broker, I treat everyone as an individual case and always put their needs first. Maximize your deposit. I have a video on the lifetime ISA. Lifetime ISAs are great if you're planning on buying within the next couple of years. Lifetime ISAs are horrible if you don't buy the right product. So make sure you read the fine print. Make sure you speak to someone. Lifetime ISAs are fantastic. I would recommend anyone watching that has kids, grandkids, nieces, nephews, young people, make sure they open a lifetime ISA if they plan on buying in the future. As long as it's not within the next year, then it won't be the appropriate product. And lastly, always speak to a mortgage broker. A mortgage broker is going to be able to speak to different lenders and get you the very best deal that you qualify for. And at the end of the day, what your barber told you, what your beautician told you, ignore it. Always speak to a licensed professional. There are a lot of myths out there and a lot of things that are actually right but may not apply to you. I find this a lot in certain communities. Like, I'm Jamaican. You might have people that have just recently moved over and they have friends and family that have been here for several years, and the friends and family think they're doing a good thing by saying, oh, you have to wait 7 years before you can get a mortgage, or talking to them about 5% deposits and 10% deposits. These things structurally may be correct, but they may not apply to you as an individual. So by speaking to a mortgage broker, you'll be able to get personalized advice that is specific to you. These videos that I make are that you can have an informed conversation, not that you can avoid speaking to a mortgage broker. If you don't know someone, I'd love to talk to you. I'd love to find out more about how I can help you as a mortgage broker. With 30 years of experience, it's going to be more than mortgages. I'll be able to help you clean things up. And I don't charge for conversations. My information will be in the description. And if you have friends or family that want to know more about mortgages, please like, share, and subscribe. Leave your comments in the comment box, and be sure to speak to a mortgage broker at least 6 months before you think you're ready to buy, because then they can help you put yourself in the right position to get the very best mortgage that you qualify for.